Hello everyone. In this lesson, we will talk about closing deals. In the previous session, I taught you how to open them, how to receive signals, and how to open deals based on those signals. In this lesson, I will show you how to close them. It makes sense that if a deal is opened, it should also be closed, but it must be closed in a timely manner and with profit. Now I will teach you how to do it correctly. As for the utility, we will discuss how to obtain it, how to set it up, and how to use it in the next lesson. So finish this session and receive your utility in the next lesson. I am giving it away for free to all the buyers of my course.
So, I logged into my platform and I want to emphasize that I have noticed that since yesterday, when I recorded the previous video, there have been a lot of significant signals up to today. So for a minute, I will walk you through these signals so that you understand correctly and grasp the essence of the whole process. So here is Food USD, a buy signal with a profitable closing. There was no signal for euro to the yen. There was a signal for Aussie to the yen. It was executed well. It closed this morning. Next, there is no France. There is no Canadian dollar. Australian dollar against euro. The signal is currently to buy. There is no pound. The Australian dollar against the Canadian dollar had a buy signal, and now there is a sell signal. The euro against NZD just closed with a small loss. There is a signal for the Aussie to the yen. Right now, it is possible to trade for a buy. Pound against Canadian dollar. Yesterday we traded based on this signal. It was this particular signal. We made a profit here. I showed you another signal. Again, another profit. Pound against New Zealander. A small loss. NZD against the Canadian dollar. Slightly. Profit. NZD against USD. Buy signal profit. Euro against Singapore. Dollar. Nothing happened. Pound against Singapore dollar. Nothing happened. So, as you can see, we had about 10 signals, and almost all of them closed with a profit. And this is just in one day. And it happens every day. But okay. Now, regarding the closures from yesterday, let's move on to the pound against the Canadian dollar for clarity. Yesterday, I made a trade at this level approximately and closed it at the level of the red average of the sigma channel. This is the average line of the price channel, the level at which we will always close trades. And this system is designed so that all trades are closed at this level. But in this system, there is also an additional closing. It is not of 100% importance. It is indeed secondary, but the indicator shows it as well. This closing is typically shown in the case of the signal closing if the quotes have generally started to reverse or have achieved their peak. Overbought or oversold conditions. For example, there was a buy signal here at this particular point in time. We make this acquisition of assets based on that signal. And after approximately 15 bars, which are essentially 15-minute candles, there were about 20 to 15 of these individual candles observed during our analysis period. The indicator then gives us a clear signal indicating that the quotes have reached an overbought level and are likely going to fall soon thereafter. And that's exactly what happened as predicted. In such cases, as these ones specifically mentioned here today, the signals provided us with accurate guidance. To close out our trade without reaching into red levels was indeed truthful. It really saved us from experiencing even a small loss potentially incurred otherwise. Yes, in one case, you can certainly follow them closely, but in most other cases, these signals tend to be more reliable indicators. Not quite. But in most cases, these signals do not provide a 100% real result. I always definitely advise to go and execute the signals by closing exactly at this average level. For example, here we look at the situation. There was a sell signal here, and the indicator gave a signal to close when the quotes reached the oversold level, but the oversold level for us is, in this case, a signal to close the trade on the pound against the franc. Do you see how the system works? As you can see clearly, the indicator gives signals for opening and provides signals for closing, but we will return to the closing shortly. In this case, it reached the oversold level at this level, and we were about 10 points short and hadn't made a profit yet. But we had just already closed the trade. That is, if we consider all these situations of premature closures and the points that we miss out on, it is better, of course, to close at the level of the moving average, which is this red line. This is the moving average of this price channel. This channel is essentially sigma, so we basically have two options. We opened a trade in the market, and we can close this. Trade based on one of two signals. Either that the quotes have reached the overbought or oversold level, like here in this scenario, as shown at this point. But yesterday, I did not close the trades based on that signal because I knew it seemed to me that the quotes would move further. And I closed this trade much better before your eyes. Therefore, it's better to ignore signals about premature closures. Always set the take profit level exactly at the level of the moving average, precisely and accurately. So I don't think there is a pound NSD. That was a different trade. Pound AUD, here we have a new trade in a sideways trend. This currency pair I am buying, placing a buy order, and setting the take profit level at the moving average level. Here it is located right at the very tip of this line. As you can see, this moving average line moves along with the price and it will shift. According to this strategy, we will need to move our take profit order behind this line, meaning it will go approximately like this. This line is currently like this, and then like that. The pound AUD is a currency pair that often exhibits a sideways trend, which means that the price moves within a horizontal range without a clear upward or downward direction. In this particular trade, I am placing a buy order, which means I am expecting the price to increase. The take profit level is set at the moving average level, which is a commonly used technical indicator that smooths out price data to identify the direction of the trend. The moving average line is currently located at the very tip of this line, and it moves along with the price. As the price changes, the moving average line will also shift. According to this trading strategy, it is important to move the take profit order behind the moving average line to maximize potential profits. This means that the take profit order will be adjusted as the moving average line changes. Currently, the moving average line is like this, and then it will be like that, and then like this, here, and every time, if we were to make several trades here, we would have to adjust the line of our take profit order along this trajectory, following this line, because we are 100% sure of only one thing. The system gives us almost certainly 95% profitable signals. However, we are 100% sure that the quotes will reach this curve sooner or later, because it represents the average value of this asset over a particular duration of time, in this particular case, over the last 100 bars. Thus, according to the law of physics, the price will return to its average state sooner or later. Therefore, we should always trail, follow this moving average, and place the take profit order exactly on it. And this will protect us in any situation when the market goes the wrong way. and we don't know when to close this trade. If the market is moving against us, against our signal, we don't know when to close it properly at all times, and we might end up closing it on a pullback. I will show you now. There are no clear examples, but I will demonstrate in detail a bit later. Specifically, right now, you need to understand the very first and most important rule. Always set a take-profit order on the moving average. Sooner or later, you will eventually close your trade at this level, which serves both as a crucial level for closing the trade with profit and as your insurance if the quotes go in the opposite direction. If this is a losing trade, it acts like a virtual 100 flat, providing a safety net. Here we have this signal, foot out, that has gone into profit, and we will close it exactly when the price touches the moving average, ensuring a profitable exit. As for the utility that I promised, I will gift it to everyone in the next lesson as a special bonus. This utility will automatically adjust the order take profit according to the moving average and will save you from a lot of hassle, making your trading experience much smoother and more efficient. Because if you had to do it yourself on your own, you would literally have to manually log into the platform approximately every 15-30 minutes and constantly and consistently adjust the order take profit. As for the utility, it will essentially set a virtual take profit in terms of functionality. This red line, which is a virtual representation, will not exist in reality, but it will virtually move it and close the trade when the quotes touch this moving average line, ensuring that the trade is executed precisely at the moving average. So the application is a great power that will definitely save you time and of course your nerves, because you will absolutely be irritated if you have to get up in the middle of the night to move your order to some line. You might say, I don't want this kind of trading, I want to relax, I want comfort. Well, the utility provides you with that comfort. The utility will also indeed simplify your trading. In terms of executing trades, there will be a separate panel where you can find your own keys and other various interesting functions. But I won't get ahead of myself. Let this information be revealed to you gradually, because this is training, and dumping all the information on a student at once would be wrong. Don't rush. You will still have plenty of time to try your hand at trading and execute trades. For now, just listen to what I say, watch what I show, and compare it with your own platform and trading portfolio.
In this lesson, we only covered a portion of the options for closing deals using the pumping station strategy. There are actually many more options. I will explain all these options to you in the upcoming sessions. But for now, move on to the next lesson, grab the utility, and let's start trading comfortably. See you soon.